Today, we lowered the policy interest rate by 50 basis points. This is our fifth consecutive decrease since June and brings our policy rate to 3.25%. Monetary policy has worked to bring inflation back to the 2% target. Our policy focus is now keeping inflation close to target. In the United States, the economy continues to show broad-based strength, and inflation has been holding steady. The U.S. dollar has appreciated against most currencies, including the Canadian dollar. Canada's economy grew by 1% in the third quarter, which was slower than we expected. Recent data also suggests growth will be lower than projected in the final quarter of this year. Growth in the third quarter was pulled down by business investment, inventories, and exports. But consumer spending and housing activity both picked up as lower interest rates started to boost household spending. Canada's job market is still softening. Businesses have continued hiring, but the number of people looking for work has been increasing faster than the number of jobs. The unemployment rate rose to 6.8% in November. It has been especially hard for young people and newcomers to Canada to find work. A number of policy measures have been announced that will affect the outlook for growth and inflation in the months ahead. The most significant of these is reduced immigration targets, which suggest GDP growth next year will be lower than we forecast in October. The effects of lower population growth on inflation will likely be more muted because reduced immigration dampens both demand and supply in the economy.